If you bought silver at exactly 9:30 this morning, you walked directly into a financial trap. While retail investors were brewing their coffee and waiting for the New York Stock Exchange to open institutional trading desks, were preparing a massive algorithmic ambush to steal your wealth today, they did not attack with actual physical metal. They hit the market with an overwhelming flood of unbacked derivative contracts. We tracked the order flow, and the numbers are absolutely staggering. They dumped paper silver onto the market at a ratio of 300 to 1 against physical supply. That means for every single actual ounce of silver, sitting in a registered COMEX vault, Wall Street just printed 300 digital promises to sell metal they do not even own. This is not a functioning market. This is a highly coordinated psychological operation designed to trigger your panic. Let me break down exactly how the 9:30 ambush works and why it happens right at the opening bell. When the traditional equity markets open, retail participation spikes. People log into their brokerage accounts, see that metals are trending up, and place market orders hoping to catch the rally. The bullion banks know exactly how retail traders operate. They map out where the stop-loss orders are clustered just below the current price. They wait for that initial surge of morning optimism to peak, and then they unleash the algorithms. They flood the bid side with thousands of short contracts. Because these contracts are created entirely out of thin air, using massive institutional leverage, the banks can overwhelm the organic buying pressure in a matter of seconds. The price instantly violently drops. Your screen flashes red, and those tight stop-loss orders are systematically triggered now. When your stop-loss hits, your broker automatically sells your position at the worst possible moment. This forced selling pushes the price even lower, triggering the next level of stops. It is a cascading avalanche of retail liquidation engineered entirely by the banks dumping fake paper contracts. The sheer audacity of the 300 to 1 paper ratio is what makes this ambush so devastating. If you tried to sell 300 cars when you only owned one, you would go to federal prison for fraud. But when Wall Street does it with precious metals, it is called providing market liquidity. The regulatory agencies like the CFTC completely look the other way because the regulators are former banking executives themselves. They wrote the loopholes that make this fractional reserve bullion scheme perfectly legal. But this system only survives if you remain ignorant of the mechanics involved. Why are the banks executing these aggressive morning ambushes right now? Because they are absolutely terrified of the physical market reality. The global silver market has been in a structural supply deficit for 5 years. The world is burning through metal faster than miners can pull it out today. Industrial demand for solar panels, electric vehicles, and defense technology is entirely inflexible. A solar manufacturer cannot build a panel with a paper COMEX contract. They need actual silver atoms. This relentless physical demand is completely draining the registered vaults in London and New York. The bullion banks are holding massive naked short positions. If the price of silver is allowed to rise organically to reflect the severe physical shortage, these banks will face catastrophic losses. They are trapped in a corner, and their only defense mechanism is to crash the paper price relentlessly. Every time they execute the 9:30 ambush, they are trying to achieve 2 specific goals. First, they want to crush the psychological momentum of the retail investor. They want you to believe that silver is a bad investment, so you sell your physical holdings and return to fiat currency assets. Second, they use the engineered price drop to quietly cover their own short positions and accumulate whatever physical metal shakes loose from panicked sellers. They are robbing you of your capital and using it to buy the exact same asset you just sold at a steep discount. It is a brilliant theft, but you do not have to be the victim in this scenario. Once you understand the mechanics of the ambush, you can use their manipulation entirely to your advantage. The first step is to recognize that the paper price on your screen is a manipulated fiction that does not reflect physical reality at all. If you are trading silver using high-leverage futures contracts or unallocated digital accounts, you are playing a rigged game in a casino where the house controls the tape. You will eventually be wiped out by an algorithmic flash crash. You must step outside of their digital control grid immediately. The only way to defeat the paper illusion is to take possession of the physical reality. When you hold physical silver in your own hands, the 9:30 ambush becomes completely irrelevant to your actual wealth. An algorithm dumping contracts cannot change the physical weight of your bullion bars. It cannot alter the conductivity of the metal or erase its 5,000-year history as a store of value. The paper price might flash red, but your tangible asset remains perfectly intact. In fact, you should learn to welcome these engineered price drops as subsidized buying opportunities for yourself. The sovereign wealth funds in the East are already doing exactly this. When Wall Street banks smash the paper price to shake out Western retail investors, Chinese and Indian industrial buyers step in and purchase massive quantities of physical silver at the artificially suppressed benchmark price. They are letting the Western banks subsidize their industrial expansion. The East is draining the physical vaults, while the West plays games with digital receipts. Eventually, this dynamic will break the COMEX completely. You cannot maintain a 300 to 1 paper ratio when the vault is empty. When the registered physical inventory falls below the minimum threshold required to settle delivery demands, the illusion shatters. The exchange will invoke force majeure and halt physical deliveries. They will cash settle all remaining paper contracts using fiat currency that is losing its value. At that exact moment, the price of physical silver will violently detach from the paper benchmark. We are already seeing the warning signs of this decoupling in Asian markets, where physical delivery commands massive premiums over the manipulated Western spot price. The tectonic plates are shifting now. You must act before this fracture becomes mainstream news. Liquidate your paper silver proxies. Exchange-traded funds that do not offer physical redemption are counterparty liabilities. Unallocated bank accounts are just unsecured loans to the very institutions that are manipulating the market today. Convert those liabilities into sovereign minted coins like Canadian Maples or American Eagles. Acquire standardized bullion bars. If you are deploying serious capital use, fully allocated and segregated private vaulting facilities located outside of the traditional banking system, take legal title now. Ensure that your physical metal cannot be rehypothecated or used to back someone else's paper trade. If you do not have the serial numbers and exclusive access, you do not actually own the asset. In a systemic liquidity crisis, counterparty promises will evaporate faster than you can possibly imagine. The United States government is currently running trillion-dollar deficits every few months. The national debt is compounding at a rate that guarantees massive currency debasement. The Federal Reserve has no mathematical option but to inflate the currency to manage this completely unpayable burden. As inflation accelerates, the true value of hard assets will become undeniable. The bullion banks know this inflation tsunami is coming. That is exactly why they are so desperate to shake you out of your position before the great repricing occurs. They want to be the ones holding the physical metal. The 930 ambush is an act of sheer desperation by a financial cartel that is running out of physical inventory and running out of time. Do not let their algorithmic terrorism intimidate you. Stand your ground and recognize that their extreme leverage is actually a sign of their vulnerability. Every time they stretch the paper to physical ratio, they bring the system one step closer to its inevitable collapse. The mathematics of a 300-to-1 fractional reserve scheme simply cannot withstand a coordinated global run on the underlying physical asset. The math always wins in the end. And we are approaching the terminal phase of this decades-long manipulation. The industrial users are panicking, the Eastern central banks are hoarding, and the physical deficits are compounding year after year. The paper pricing mechanism is fighting a losing battle against the laws of supply and demand. Your responsibility is to protect your purchasing power and your family from the fallout of this collapsing system. Do not wait for a perfect entry point because the market makers control the short-term tape. Accumulate consistently and focus entirely on the physical ounce count in your possession. The noise of the daily chart is designed to confuse and demoralize you. Ignore the paper price fluctuations. Focus on the undeniable macroeconomic fundamentals that guarantee the eventual revaluation of precious metals. The fiat currency experiment is failing globally, and hard assets are the lifeboat. When the COMEX finally breaks and the true physical price is unleashed, the wealth transfer will be breathtaking. Those who held strong through the 930 ambushes will secure generational financial independence. Those who surrendered to the paper manipulation will be left holding worthless fiat. To fully grasp the magnitude of the 930 ambush, you must understand the history of market spoofing. Spoofing is the illegal practice of placing massive orders with no intention of ever executing them. The algorithms flash these giant cell walls on the order book just to create sheer terror. Retail trading software interprets these massive cell walls as institutional distribution. The retail algorithms automatically sell to avoid the perceived incoming dump. But milliseconds before those giant institutional sell orders are actually filled, the banks cancel them entirely. It is a phantom wall. The banks use this phantom selling pressure to drive the price down and trigger the real stop-loss orders placed by human traders. Once the real selling begins, the banks flip their positioning. They become the buyers at the newly depressed price level. They literally steal the momentum of the market. The Department of Justice has prosecuted several individual traders for spoofing the precious metals markets. But prosecuting a few rogue traders is just security theater. It is a public relations stunt designed to make you believe the markets are being policed. The systemic leverage is never touched. The core issue is the 300-to-1 ratio itself. How is an exchange allowed to function when it clearly does not possess the assets it claims to trade? If a grain silo sold 300 receipts for the exact same ton of wheat, the operators would be indicted for running a massive Ponzi scheme. But the financial elite have convinced lawmakers that derivative leverage is necessary for market efficiency. They argue that paper contracts provide liquidity. In reality, they provide a mechanism for infinite price suppression. They dilute the value of the real asset by flooding the zone with paper. Think about what happens when a new silver mine comes online. It takes a decade of geological surveying, permitting environmental impact studies, and massive capital investment to extract a few million ounces of silver from the earth. The physical effort and energy required are absolutely astronomical. Now compare that to the bullion banks on a Tuesday morning. A trader at a major financial institution can press a button on a keyboard and instantly conjure the equivalent of 50 million ounces of silver into the futures market. No mining, no drilling, no refining, just pure digital inflation instantly. This extreme disparity between the physical cost of production and the digital cost of creation is what makes the paper market a complete sham. They are inflating the supply of paper silver to hide the catastrophic shortage of physical silver. But inflation always ends in a spectacular reality check. We are seeing the reality check manifest in the industrial sector. Silver is the most conductive metal on the periodic table. It reflects light better than any other element. It is highly antimicrobial. These unique physical properties make it entirely irreplaceable in the modern technological era. When a defense contractor is building a guidance system for a hypersonic missile, they cannot substitute silver with copper or aluminum. The system will fail. When a manufacturer is building high-efficiency solar panels, they must use silver paste to capture the energy. There is no cheap alternative. The global push for green energy and electrification guarantees that industrial demand for silver will continue to grow exponentially regardless of the economic cycle. Governments are mandating the transition to electric vehicles and renewable energy grids. This mandates the massive consumption of silver. Meanwhile, the mining sector is completely starved of capital. Because the paper price of silver has been artificially suppressed for decades, mining companies have not had the financial incentive to explore for new deposits. The global pipeline of new silver projects is effectively empty right now. Ore grades at existing mines are declining rapidly. Miners have to dig deeper and process far more rock just to extract the same amount of silver they did 10 years ago. The energy costs associated with diesel fuel and heavy machinery are skyrocketing. The cost of physical production is going vertical. So we have a scenario where physical demand is completely rigid and expanding while physical supply is constrained and contracting. In any normal market, this dynamic would result in a massive price spike. But the 930 ambush and the 300-to-1 paper ratio are suppressing that signal. They are temporarily hiding the inflation from the public. But you cannot hide a physical deficit forever. When the factories call the warehouses and discover that the silver is simply not there, the paper contracts will be exposed as fraudulent digital receipts. The industrial panic will be epic. Corporations with billion-dollar market capitalizations will not sit idly by while their production lines grind to a halt. They will bypass the COMEX entirely and begin negotiating direct off-take agreements with the mining companies. They will pay whatever physical premium is required to survive. And this industrial scramble will bypass the paper pricing mechanism. The spot price on your screen will become completely irrelevant. You will see a bifurcated market where paper trades at $30 and physical trades at $80 or $100. The spread will be the cost of actual reality. The smart money investors, the sovereign wealth funds, and the elite family offices are already executing this exact strategy. They are utilizing the artificially depressed paper prices to quietly accumulate physical tonnage. They are taking delivery and moving the metal into private secure vaulting. They understand that the 930 ambush is a temporary phenomenon. It is a symptom of a dying system desperately trying to maintain control. By purchasing physical metal, they are actively removing the ammunition that the banks use to suppress the market. Every ounce stacked is a blow to the cartel. You must adopt this exact same sovereign mindset. You are not a day trader trying to scalp a few pennies from a manipulated futures contract. You are an asset accumulator building a generational fortress of wealth. You're exchanging a dying fiat currency for an undervalued hard asset with zero risk. Do not let the psychological warfare of the financial media deter you. The media is owned and funded by the exact same institutions that execute the morning ambushes. They will constantly run hit pieces on precious metals, calling them barbarous relics that yield no interest. It is coordinated gaslighting. They want you chasing yield in overvalued tech stocks or highly speculative digital tokens. They want your capital trapped inside the digital matrix, where it can be monitored, taxed, and eventually inflated away. Physical silver represents an escape hatch from their centralized digital control system. When you hold sovereign minted bullion, you are your own central bank. You have zero counterparty risk. You do not need a password or an internet connection to access your purchasing power. In a world of increasing cyber attacks and digital banking failures, physical metal is the ultimate fail-safe. The global macroeconomic backdrop is accelerating this transition. The BRICS nations are actively building a parallel financial architecture designed specifically to bypass the Western banking monopoly. They are accumulating physical gold and silver to back their new international settlement systems now. When the global south demands payment in hard commodities rather than fiat paper, the dollar hegemony will shatter. The United States will no longer be able to export its inflation by printing currency and forcing the world to absorb it. The inflation will come rushing back to the domestic economy fast. This is the nightmare scenario for the Federal Reserve and the Treasury. They are trapped under $36 trillion of sovereign debt. If they allow interest rates to rise to combat the incoming inflation, the government will literally default on its interest payments. They are mathematically dead. Their only possible move is to pivot back to massive quantitative easing. They will be forced to print trillions of new dollars to monetize the debt and keep the government functioning. This massive dilution of the money supply will destroy the remaining purchasing power of the fiat dollar permanently. As this currency destruction becomes obvious to the general public, the rush into physical safe havens will be spectacular. The retail masses will finally wake up from their slumber and desperately try to convert their dying dollars into anything tangible, but the physical silver will already be gone. The sovereign whales, the industrial giants, and the early accumulators will have already drained the vaults. The retail public will be locked out, forced to pay astronomical premiums if they can find the metal at all. This is why timing is absolutely critical. You cannot wait for official confirmation. The 9:30 ambush is your warning siren. It proves that the market is heavily manipulated and artificially suppressed. It proves that the current price is a complete fiction. Use their manipulation against them. Let them dump their paper contracts and use the opportunity to drain their physical. Become relentless in your accumulation. Dedicate a specific percentage of your savings to physical precious metals and acquire them consistently regardless of the daily noise. Over time, your average cost will reflect the suppressed paper price, but your actual wealth will be anchored in physical reality. Educate your family and your peers about the fractional reserve nature of the COMEX. Explain to them the impossibility of the 300-to-1 paper ratio. When people understand the mechanics of the fraud, they are much less likely to panic when the banks engineer their violent morning flash crashes. We are standing on the precipice of the greatest financial paradigm shift in modern history. The transition from unbacked fiat paper to tangible commodity-based money is already underway. The turbulence in the markets, the engineered crashes, and the rising premiums are all symptoms of this massive shift. Stay focused on the physical ounce count. Ignore the fiat valuation of your stack because the fiat currency itself is failing. Your goal is not to have more dollars. Your goal is to preserve your purchasing power and survive the collapse of the debt-based monetary system with your wealth fully intact. The bullion banks are playing a dangerous game of musical chairs with an empty vault. When the music finally stops, the paper illusion will vanish instantly. Make sure you have secured your physical seat before the panic begins. The ambush is exposed and the power is now entirely in your hands today. The choice is entirely up to you. You now know exactly how the trap is set and exactly who is setting it. You understand the impossible leverage ratio that sustains the illusion. You have the knowledge required to step outside the digital slaughterhouse and build a fortress of tangible physical wealth. Do not be the retail trader who wakes up to a red screen and panic sells their future to a Wall Street algorithm. Be the sovereign individual who sees the manipulation, buys the artificial dip, and secures the physical metal. The ambush only works if you do not see it coming. You see it clearly now. The window of opportunity to acquire physical silver at these heavily subsidized prices is rapidly closing. As the global supply chain tightens, the premiums on physical metal will explode. Prepare yourself for the chaos ahead and hold the line. The era of paper supremacy is finally coming to an end.